Hey traders, what a move on Friday afternoon. 100 plus point move to all the shorts closed out. As I mentioned earlier in the week, we did go below these February lows. Why? Because everybody has their stops below February monthly lows. And then it looked like, oh, it's going to go to the January low. And all the shorts closed out and said, not yet. So what do we have? We have this big choppy range that, like, if you're looking at this like on a 2 minute time frame or something, you would be like, that is awful. I mean, you definitely, it's the non-trending market. It's just a trader's market. Like, you're in and you're out, you're in and you're out, because if you've been in since, November, you're up, 1% or something. Um, and most of the people that are buying these breakouts are all underwater. This is all underwater now. But we do have a little bit which could be considered a left shoulder ahead, and we'll see if this turns into a right shoulder, which means we could just get this trickle up and just grind out everybody. Everybody thought it was going lower, or we could just stay in this range. It's very hard to tell. Or, we go back below these November lows, which in my mind, it just seems like we will, because of the noise out there, and the people that are making the noise, they know how to play this game better than all of us. And they'll just rinse everybody out, but then they'll decide, okay, we've grabbed everybody that we can grab, and now we'll just grind it back up. And that's likely what's going to happen a little bit this week, I would suspect, for the next couple days, because all the shorts closed out. But we still have a falling RSI, and it hasn't quite hit. Well, it's as low as it's been since December on the daily. Going back, 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 back. But you can see how it touches this green line when it really bottoms. Uh, going back to August, the daily kind of nicks that 30 RSI. Same thing back in April. It just nicks it. So we haven't quite nicked it yet. So that tells me that we will be going back below this 57.96 level, likely back to the 57. Anyway, but for the next couple days, I think it's going to be a bit of a grind up, because we have all these other daily highs here, which is where a lot of shorts will have their stops. So I suspect this is going to grind up, grab all the stops here and here, and then looking at the full retracement back up to the 61.84 area. Yeah, I mean, a 50% retracement would be right up here to the 60.17. And then you've got this descending 20 moving average. So, yeah, anybody that the shorts that on the algos that put their stops on the 60.20, that'll get taken out too. And then we have that 161.8% Fibonacci extension at that 60.46 area. So I wouldn't be surprised at if this kind of trickles up to there, and then we'll see if the sellers can get back in it, or this was the bottom. It's very challenging to tell in this very choppy sideways marketplace. So, but again, for the next couple days, scroll down to 60-minute chart, massive move there. First level is going to be the 59.23. Next level is going to be below that candle down at the 5,900 level. And then basically just going to trade these kind of fib levels in these bounces. And I suspect, but at the same time, those may not happen with limited volatility. It depends on the volatility. And we might just get, we're so far from the 15 moving average right now. We're going to have to watch these smaller time frames for just bounces off the 20 moving average too, if we just have very little volatility. So there is some news on Monday at 7, but there's no news on Tuesday high impact other than what's his face, blah, 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 blah. But look for, look for a long trending, a long biased market through Wednesday and buy the dip. Take care. Those are the levels. Trade them well.